Hello, everyone. I'm Gary Flater, Director of Education for Direct 1031 Exchange, and I would like to welcome every one of you here today for our educational webinar. We're going to be going over an introduction to Direct 1031 and an introduction to 1031s, as well as an introduction to DSTs. Before I introduce our presenter, James Brunger, I need to go over our disclosures and disclaimers. The information herein has been prepared for educational purposes only and does not constitute an offer to purchase securitized real estate investments. Such offers are only made through the sponsor's private placement memorandum, or PPM, which is solely available to accredited investors and accredited entities. This presentation does not constitute an offer to sell or the solicitation of any offer to buy interests in a Delaware Statutory Trust, or DST, which may only be made at the time a qualified subscriber receives the private placement memorandum describing the offering. In the case of any inconsistency between the descriptions or terms in this presentation and the PPM shall control. DSTs and 1031 exchanges are speculative and involve substantial risks. There are risks associated with investing in real estate and Delaware statutory trust properties, including, but not limited to, loss of entire investment principal, declining market values, tenant vacancies, illiquidity, general market conditions, and competition. Lack of operating history, interest rate risks, the risk of new supply coming to market, and softening rental rates. General risks of owning and operating commercial and multifamily properties, short-term leases associated with multifamily properties, financing risks, potential adverse tax consequences, general economic risks, development risks, long hold periods, lack of diversification, default risk, and capital call risk. Potential cash flows and returns appreciation are not guaranteed and could be lower than anticipated. Past performance is not indicative of future results. Diversification does not guarantee profits or protection against losses. DST 1031 properties are only available to accredited investors, generally described as having a net worth of over $1 million exclusive of primary residence and accredited entities. This presentation contains confidential and/or privileged information. If you're not authorized to receive this, you must not use, copy, disclose, or take any action based on this presentation or any information herein. The information contained in this presentation, including the numbers used, is general in nature, approximate, and intended for educational purposes only. This material is not to be interpreted as tax or legal advice. Please speak with your own tax and legal advisors for advice and guidance regarding your particular situation. Certain information contained in this presentation is based on or derived from information provided by independent third-party sources. Direct 1031 Exchange believes that such information is accurate and the sources from which it has been obtained are reliable. Direct 1031 Exchange cannot guarantee the accuracy of such information, however, and has not independently verified the assumptions on which such information is based. This presentation is being provided on a confidential basis. Accordingly, this presentation may not be reproduced in whole or in part and may not be delivered to any person without prior written consent of Direct 1031 Exchange. Past performance is not indicative of future results. Securities offered through Wealthforge Securities LLC, a member of FINRA and SIPC. Direct 1031 Exchange and Wealthforge Securities are separate entities. And with all that said, it's my pleasure to introduce our CEO, James Brunger. James has over 20 years of experience in the financial services and commercial real estate business development and management. Previously to Direct 1031 Exchange, he was Senior Vice President of JLL LaSalle Investments, a 200-year-old real estate services company. He has raised in his career over $2 billion of investment structures throughout. And James has owned and managed personal real estate investment assets for over 15 years. And with that being said, I'd like to turn our presentation over to our CEO, James Brunger. Welcome, James.
Thank you very much, Gary. You had the hard work here. Appreciate everybody's attendance. Thank you very much. We've had an overwhelming response to this educational webinar. A real quick administrative order. Due to the fact that we had a number of people register for this event, we will not be taking live questions and answers at the end. However, you should see there is a Zoom function on this meeting that allows for Q&A as well as the opportunity for you to use a chat or raise your hand function. Again, due to time limitations, we will not likely be able to answer most questions live. We have received a number of questions via email. I will try and answer all of them live on this call, but the reality is please feel free to ask your question, again, via the Q&A function on this Zoom meeting, the chat function, or raising your hand, and we will certainly answer them offline after the presentation. So without further ado, and thank you again, Gary, my name is James Brunger. We are going to just cover the basics of us as direct 1031 exchange, the basics of a 1031 exchange, and then lastly, the basics of a Delaware statutory trust as a 1031 exchange vehicle. Who is direct 1031? We're a national group of investment professionals who each average over 20 years of industry experience in traditional real estate investments. We educate and guide real estate investors as well as their advisors on the best way to potentially continue wealth generation through a 1031 exchange. Our motto is retire from running your real estate, and that's what we help people do. We work with professional advisors, many of you on the call today, to help your best clients find ways and solutions for them to take advantage of a 1031 exchange and other vehicles that may benefit their personal situation. We do everything hands-on, and we do everything with personal service. So how do we work with you? We manage all coordination between investment products, sponsors, and qualified intermediaries. We offer investment funds that are eligible for 1031 exchanges, some of which we'll review today. And we lead you through the closing of the investments, the follow-up, and the stewardship of the relationship with your investments in real estate. We work with the professional advisors that also advise those successful investors. We work very closely within the community of professional advisors. Our core values are pretty simple. We want to provide value to the market. We act with integrity in all situations, and we expect transparency in our partners as well as ourselves and our own work. Service is always above expectations. That being said, let's talk about what a 1031 exchange is. This is going to be a basic introduction. More often than not, we get very detailed on individual situations. So what is a 1031 exchange? You've probably heard of it if you've been in the business or investing in real estate for any period of time. A 1031 exchange is simply a tool used to potentially build wealth. A 1031 exchange transaction are also referred to a couple different titles. They're called tax-deferred exchanges, like-kind exchanges, starker exchanges, or delayed exchanges. 1031 exchanges are generally very complex, which is why we recommend partnering with experts such as ourselves or professional advisors who can help work through your personal situation. What are the highlights of a 1031 exchange? The sale of an investment property in real estate may trigger the realization of a capital gain and depreciation recapture. The term 1031 exchange is named after Section 1031 of the Internal Revenue Code. If you like, I'd be happy to go all the way through that for you, but I don't think we have enough time, and I think everybody would fall asleep by the end of the call. Typically, a 1031 exchange involves the sale of a rental or investment real estate property. It is not subject or not participating associated with personal residences. The benefit to the real property owner of a 1031 exchange or investor is to potentially build your wealth faster by keeping your money working for you, deferring your taxes by utilizing a 1031 exchange. What is a like-kind property referred to in a 1031 exchange? It refers to the nature of the character of the property, not its grade or quality. Generally, all real property is like-kind to all other real property. Real property can be improved or unimproved because this only relates to the grade or the quality, not its kind or class. The exchanger's intent must be to hold the replacement property for investment or productive use in trade or business. Again, not for personal use. So it's a pretty broad and open understanding of what like-kind property is. The exchanger may exchange real property for any other real property located in the United States or its possessions if the replacement property is held for the productive use in business or trade or for investment. So what does that mean? We work with people and individuals all the time that are looking at maybe selling an apartment building or a multifamily duplex that they've owned for a very long period of time, and they want to exchange into being a like kind and using 1031, maybe into a medical office building or a commercial or a retail investment. totally acceptable under 1031. It's a very broad use. Again, the real line of delineation is the difference between trade or business and that held for personal property. So just a quick summary of 1031 exchanges, replacement of some of the terminology or replacement property qualifications is like-kind replacement property. There's something called an identification period of 45 days. What that means is when you sell your existing property that's in place for productive use or business or trade, you have up to 45 days to identify your replacement property. There's a closing period of up to 180 days, 6 months, from the date of which you've closed the down leg sale or the sale of your current property. So the closing period is 180 days. The qualified intermediary, there's a individual and or a corporation, a function that's needed to help facilitate. They're often called accommodators for 1031 exchanges. These qualified intermediaries serve as an individual to make sure that you follow the exchange rules, including the identification period and the closing period. You must use a qualified intermediary when facilitating a 1031 exchange or entering into a 1031 exchange. The investor or the taxpayer may not receive the exchange proceeds at the close or the sale of a property. The replacement amount requirements gets a little bit more detailed on each individual situation, but the rule is that the replacement amount to fully defer all tax, you need to have an equal or greater value. You must reinvest net cash proceeds plus equal or greater debt into a replacement property. So that's just some high-level terminology. But to review real quick on the identification period and the closing period, which are the two biggest questions we get. You sell an investment property. The proceeds must be retained at a qualified intermediary. Qualified intermediary serves the function to make sure the rules are followed for your 1031 exchange and then report that they have been followed. You have 45 days from the closing of the sale of your investment property to identify replacement property, and you have up to 180 days to purchase and close on that identified replacement property. So that's a 1031 exchange. High level, quick introduction to what a 1031 exchange is. Now let's move forward to an introduction of a Delaware statutory trust, or a DST as they're commonly known. What is a DST? A DST, or Delaware Statutory Trust, is a fund for investing in commercial real estate in fractional units and qualifies for 1031 exchange treatment. A DST fund is direct 1031 exchange, our principal path to assisting you to potential wealth generation. It's mainly what we focus on and use as a 1031 exchange tool for our investors. Again, DST, a fund for commercial real estate fractional units that qualifies for 1031 exchange treatment. How does it work? A real estate investment company, often referred to as a sponsor, buys commercial real estate. They manage the investment. They sell interest or units to accredited investors, and then provides potential distributions, cash distributions, generally monthly, to investors. You own a beneficial ownership of the Delaware Statutory Trust that owns the real estate investment, and someone else, the sponsor, is managing the property through a DST vehicle on your behalf or to your benefit. A few highlights of how a DST may benefit most of the investors that we work with, at least, is the minimum investment is generally starting at very low amounts, $25,000 or $50,000. There is no tenant liability or responsibility, and there's no owner liability or investor liability or responsibility. The responsibility of management and liability falls to the Delaware Statutory Trust, and thus also the sponsor who manages the asset on behalf of the trust. If there is debt, there is no recourse to the investors. The debt is recourse to the actual fund, the Delaware Statutory Trust. If organized correctly, and we ensure that all the ones that we represent and work with do qualify, this continues your 1031 eligibility. What that means is placing assets in a Delaware Statutory Trust may give you the opportunity to exchange again in the future. You don't forego future 1031 eligibility by investing in a Delaware statutory trust. It continues that eligibility. Generally, there is a 5 to 7 year life cycle of the funds of the Delaware statutory trust, meaning a DST may sell within 5 to 7 years, and some have life cycles of 7 to 10 years or longer. They are generally illiquid investments. They own real estate. That real estate is generally illiquid as well. Potential distributions are generally paid monthly. It does depend on the sponsor as well as the fund itself. And this potentially eliminates the unknown of where to exchange and what you may buy as a replacement property. Again, I highlighted under a 1031 exchange, you have 45 days to name replacement property, 180 days to close. A Delaware statutory trust can help change that time frame by having the replacement as well as the closing be established with the property inside of a DST qualifying. So a quick summary of Delaware statutory trust terminology. A DST, it's a trust to hold real estate on behalf of beneficial owners, generally in fractional units or interests. A sponsor is a real estate investment management company responsible for buying, purchasing, and managing the real estate of a Delaware statutory trust. A life cycle is the length of time a trust is expected to hold an investment. And loan to value, often commonly referred in the PPMs as well as inside of offerings or real estate. If there is debt, an LTV calculation is simply published, which is the percentage of debt secured by the trust on behalf of the investors, but is non-recourse to the investors themselves. So we've given you a pretty quick and pretty high-level introduction to both the 1031 exchange and a Delaware statutory trust. We often perform these webinars on a regular basis, and we do get more detailed over time. Each individual situation does require some attention, and the reason why is because no two exchanges have ever been the same. No two offerings are generally the same as far as the Delaware statutory trust, but really no two 1031 exchanges follow the exact linear path that you would think they would. We're here to help in any way we possibly can. That being said, I think what we'll do is we'll go to some of the questions. Gary, have you collected some questions from the email? Gary, on? Oh. I'll unmute you, Gary. There we go. Gary.
Thank you, James.
Sorry about that.
A couple of questions have come in. One is, if I sell land that is leased farmland, do I have to exchange into land again?
Great question. Yeah, so a land sale, which common, a land sale in use for productive use of business or trade is sold. A like-kind exchange is any investment property to any other investment property for the productive use of business or trade. So no, land can be exchanged into any other property type, and also, as noted in the presentation, any other property condition. More often than not, we do see investors who take land and look at income-producing property or higher income-producing properties as their exchange. A very good exchange question.
That's a great answer,
I'll look
James.
at the Q&A here real quick. Does not seem okay. Any other questions that you got so far?
Yeah, I've got another one that came in. So I have debt on a 1031 exchange. Do you have to offset it? And what do I need to do to defer all taxes on my exchange? I know you covered it, but it's always good to hear it a second time.
So debt on a property, again, to fully defer all tax on a 1031 exchange, and then I'll add in the context of a Delaware statutory trust, but to fully defer all tax on a 1031 exchange, the replacement property sold, the value of that replacement property sold has to be fully replaced. I'll use an example. $1 million property with $500,000 of debt, you have to buy at least or more, again, the qualification is or more, at least $1 million or more of replacement property to ensure that you defer the entire tax position. On a Delaware statutory trust, in that same example, some Delaware statutory trusts have no debt, some Delaware statutory trusts have debt. In that same example, an investor would have to find a Delaware statutory trust or look at a Delaware statutory trust. If they wanted to defer the entire tax, they would have to look at a replacement of at least $1 million. So in that case, $500,000 with a 50% or higher LTV DST to replace the entire $1 million. Any other questions, Gary, that you see? I don't see any questions on the Q&A. If anybody wants to ask one, feel free.
Another one that we have, James, is a DST. I know we identify up to 3 properties within 45 days. How quick can we close once we've identified?
Well, since a sponsor already owns the real estate in a DST, or I'm sorry, as a DST already owns real estate of which the sponsor has procured and had that investment, what you have is the replacement property is already available for purchase. So the units of replacement property are already available for purchase. So if somebody is looking at a 1031 exchange into a DST, it's generally name and close 7 days or less. It really depends on how quickly they would like to move. And the main reason why is because obviously Delaware Statutory Trust essentially reversed the order of naming, identifying, moving on a property. We did have 2 questions through the open portal. I'd like to, first one here, and then I'll take both of these. Then for the sake of time, since we are about 20 after, I'll go ahead and close out the call. Regarding the DST, debt is non-recourse to the investor. What entity has recourse to the debt in lieu of the investors? Which is a tremendous question, so thank you for asking it, Stan. So there is a carve-out guarantor of the debt itself, which is the sponsor. They serve as that carve-out guarantor of the debt up until the offering is completely subscribed. And then the offering itself, the Delaware Statutory Trust as a fund, is then responsible for the debt. It doesn't fall to the investors itself, but so during the offering period, essentially until the fund is raised, the carve-out guarantor is generally, it will be the sponsor of the DST. Another reason to look at, funds and DSTs that have great sponsors with good history and underwriting and likely know what they're doing, which is exactly what we do as well. Somebody did ask on fees, commission, or flat when it comes to looking at a Delaware Statutory Trust. Is the last one I'm going to answer. I'll take the rest of these offline. Thank you so much, everybody, for answering or typing in all of these questions, but we will absolutely answer these offline. The fees are clearly outlined in a private placement memorandum. They are a percentage of the total offering, and there is a standard page in each offering. And again, on our model of doing business, we walk through with each of our investors this standards page. It's called the use of proceeds, and it shows the dollar amount and then the translation to the percentage of that fee to the offering. Common fees that are associated with a DST might be things like a sponsor fee, which is paid on behalf of acquiring the property, closing costs, legal fees associated with organizing the offering, legal fees associated with actually purchasing the property. And sometimes other fees may include things like loan fees, et cetera, but they're clearly outlined in that sponsor use of proceeds, something that we walk through with each and every one of our investors. At 3:23, and I plan for this call to be 20 minutes, there are a number of other questions. I will answer these directly to you. I do appreciate everybody's time on joining this call. Again, we do host these on a regular basis. We do also host more advanced presentations as we dig deeper into some of the intricacies and run through examples around with Delaware Statutory Trust. So thank you, everybody, for joining the call today. All of those of you who have asked these questions, I will get back to you, or somebody on the team will get back to you as soon as possible. Please call us if we can assist in any way, shape, or form on questions for your 1031, Delaware Statutory Trusts, or assist your clients in just looking at what the options are and available to them. Thank you again, everybody. Really appreciate it. Have a great day.
Thank you.